Good evening, traders. Today is September the 23rd, 2010, and I wanted to do a video on ETFs, being that we're in a crucial point in the markets. I'm going to start off looking at the XLY. It's a consumer discretionary select spider. And ever since the month started, this, like amongst other ETFs, have just been ripping upwards. And right now, we had a close below the 10-day moving average today. This is the August high right here, and we're still above this. So our next line of support, I feel we could get a move back down to this 31.96 level, and the 200-day moving average is at 29.77. We have this ascending triangle which was broken, as you can see, and that remained bullish, and now we're above all moving averages, so this is only healthy right now. I'd really like us to hold above the August high, but we'll see how that plays out. Next ETF we're looking at is consumer staples, and just like everything else, this whole month has been spectacular. We're up 3.5% this month, and we are well above this August high. You see this trend line right here? This dates back all the way off a weekly time frame, all the way from 2008. We're consolidating right above this trend line, and we're a little bit under the 10-day moving average, but the 10 still turned up. So I want to see if we could hold above this August high, which was at 27.46. I'll remain bullish then. If we break that, look for the 21 period moving average, which is at 27.29 to come into play, and eventually 27.01, which is the 200. I will remain bullish on this ETF as long as we hold above the 200 and this 100. No, we can't slip less than 26.84, which is also the trend line, the ascending trend line dating back from July. This green line right here is a descending trend line. This is the energy select spider right here, and we have this descending trend line, as you can see, this green one, and we have a little congestion right here with the 21 and the 50 and the 100-day moving average. The 10-day moving average we got to close below today, and we broke it. I am quite bearish on this energy sector, just saying. The 200-day moving average, we didn't get over it. We didn't even attempt to get over it. The last 3 times we've tried it over the past few months, we've ran up to it and we failed all 3 times. We couldn't even get above the August high this time, which was at 56.31. Now if we slip past this 21-day moving average, which is at 53.53, I really see us coming down and testing these trend lines, and eventually the 50.33 level, which is September's low. So I'm most definitely short-term bearish on XLE, and I'm going to use these moving averages to gauge whether the move could be more. Next we're looking at XLV, the healthcare ETF, and we're still holding above the August high. Now what happened is, ever since September 1st, this whole month, we ran all the way up and we came up to the 200-day moving average, which is at 30.41, and we pulled back. That's not bearish. If we break below this August high, then I will get bearish and I will look for a move back down to 29.39. But for now, I'm still bullish on the healthcare sector. We really need to hold above the August high though. And as you can see, we have this declining trend line dating back all the way from March high of this year. I feel that we could come down and get some buying in this 29.39 level, in this 29, which is where the 21 and the 50-day moving average are. I'm looking at the GDX, the gold miners ETF right here, and this thing's just ripping just like gold is. There's nothing on this chart that makes me think it's bearish. This 56.87 right here is a level that I'm really looking to get over. because this level dates back from the beginning of 2008. The December high, it's 55.40, and we got to close down 60 cents today on this ETF, but we're still above that. We still have a ascending 10-day, 21-day, 50-day, and 100-day moving average, and we're still above the 200-day moving average. I think that if we did pull in a little bit, maybe get to this ascending trend line, that it would be healthy. And I think that more bulls will be deploying capital into this ETF. Looking at the XLB materials right now, ETF, and I'm short-term bearish on this, and I'm going to show you why. We came up, we peaked our head right over this August high, which is this line, and I drew a little head right there. Now the 200-day moving average is at 32.14. The 21 days at 32.33. All of these we definitely need to look out for, but the 200 is the most significant. As long as we hold above this, we can look for a bullish move to get us back above 32.90. However, I don't think that this is going to hold. I think that the sellers could come in and we could sell below the 200 and come all the way down to the 100, which is at 31.18, which is actually pointing down. But this connects to this trend line as well, dating back from July's low. If the selling continues in the market, which I think short term it will, look for a move back down to 31.18, and then the trend line needs to hold. In each and every stock, an ETF that I'm highlighting tonight, you're going to see an uptrend dating back from either August low or July low. These have to hold. These trend lines that I'm showing you on every ETF, they have to hold. If they break, the selling will come, and it will come heavy and fast. I'm pointing all this out so you could be ready for it. Looking at the DBA ETF right now, which is agriculture, this has been very bullish ever since June. We had a takeover bid in potash that's fueled it, and the ags have just been on fire. Mosaic, even Monsanto had a run, which is surprising because there was a lot of bears shorting that stock. Anyways, today we finished down 16 cents, 0.5%, and we closed below the 10-day moving average today. We're still above this price level dating back all the way from October of 2009. If we could hold above that, we could possibly get a move higher and bounce off it. I don't think we're going to hold above it though. I think we're going to come down and try to find support of this 26.88 level, which is also in alignment with this uptrend dating back from July's low. So if we break that, you start using your moving averages as indicators, 26.17, and then we have the 25.06 and the 25.21 level being the major significant moving averages, the 200 and the 100. Right now, I'm bearish even on this agriculture ETF, and I think that these levels I just pointed out to you will come into play over the next few weeks. Right now I'm looking at the retail holders, the RTH ETF, and this thing has just been on a tear ever since September. The guys that I work with have actually been long ever since September 3rd. We have a buy indicator that came in, and right when we got over these moving averages, that's where we were all buying, the guys on my team. Wrote it up, and right now, as you can see, other things are selling off. This retail ETF is just held strong. We're still above the 200-day moving average and the 10-day moving average, so we're still bullish on this, and we actually finished about even today. We didn't decline, unlike the markets. The Dow finished down 76 points, and this didn't even finish down. Bed Bath & Beyond even got an upgrade today. Look at this. The 100's pointed down. I don't like that, but the 21 is about to cross above the 100, and the 50-day moving average is turned up. If we do get some selling, if the market really sells hard, this is going to go down just like everything else. If we get below the 94.86 level, which is the 200-day moving average, we're going to look to start using these levels as support, 92.25 26 will be our next level, and then 90, 61, and 87.69. Looking at the home builders right now, this is really just consolidating. Lennar came out, they had better than expected earnings. KB Homes reports tomorrow. We came up and we started selling below the 200. That's quite bearish. Worst case scenario, we'll get a move back down to the low that we put in September, which is at about 1360. Looking at the transportation right now, this is really something major that you need to watch out for, because this is what runs an economy, the transports. And 81.82 is the high that we put in August. We came up and we actually didn't even get above that. We sold above it. We sold right below it, excuse me. We came down and we actually even closed below this descending trend line that we have going on here, dating back from April. And we met support at 78.67 level, which is the 2150 and 100 period moving average. The 200 is at 77.27, and that looks like we're gonna test that in the next few days. If the bears step in, if the bulls step in, we're gonna come down. We're gonna get a bounce off the 200, and that will be good for the economy and everyone that's optimistic. However, if we sell below this 200, if we come here and actually come down, look to retest this inclining trend line dating back from July low. And if we break that 72.50, that will be our support, and then 69.94, and then we could just keep heading lower, 67.50, and start drawing our support levels. Looking at the IYR right here, the real estate ETF, since this is what led the huge decline in 2008 to the short side, and we were doing so good. We needed to get above this 55 level, which was the April high. We were unable to hold above it. We poked our head above it 2 days in a row, but that was everybody that bought in the beginning of September selling their stuff up here. And then over the past week, we're down 3%. Actually, today we finished down 3%, but that just took away all the gains that we made this previous week. Now we came down. 51.78 is the 50-day moving average, and we have an inclining trend line here dating back from July's low, and we have the 100-day moving average of 50.75. We're going to keep using these levels and watching this. We're still well above the 200. Worst case scenario, we come down, we test this yellow trend line, and then retest this 48.95 level. Out of the ETFs for the next day, I think tomorrow I'm going to trade IYR. If I have enough time in this video, I'll show you why. Looking at telecom right here, telecom's been on fire. Verizon, AT&T, I've been using those stocks to gauge this ETF. We came in, we put a high at 21.84. The August high is right here around this 20.80 level. Don't quote me, but that's pretty much where it is. Right now, we got to close a little above the 10-day moving average today, but I think that we're going to slip down and retest this August high around this 20.80 level. If we break that, use 20.43 and then 20.20 for your next levels. Just note that we're still holding above this 200-day moving average, so short term bearish on almost all the ETFs, but they look good long term if the market continues going up and if this is just a consolidation mode. Last one I'm going to look at is the emerging markets. Unlike everything else, this one still looks bullish. We just need to hold above the 10-day moving average. If we slip below it, look for August high to come into play, then the 21, which is at 42.03, the 50-day moving average, and the 200-day moving average. Okay, this is the IYR. This is the ending of the video. I said I'd go over and show you what I'm going to be trading tomorrow. This is what I'll be trading. We sold off way too fast on this IYR. Tomorrow we need to hold above today's low, which was at 51.94. We need to come down and we need to get a bounce off this. I'm going to be accumulating right at today's low if we come this far down and all in this area. I'm going to look for a move. R1 will be 52.51, R2 will be 52.93, and R3 will be 53.30. I don't know if we could get quite this far up, but if we do, I'll be ready for it. A bearish case scenario is if we sell below the low that we put in today at 51.94, then look for 51.13 to come into play. I hope this helped you guys out. Just use it as an indicator to gauge the market. Have a great weekend.